Hello traders, the title of this video is The Power of Elliott Wave Triangle Correction Trading. Alright, I've been asked by a trader to talk more about the Elliott Wave Triangle. I would like to congratulate that trader for asking an essential question about the Elliott Wave Triangle. Alright, so as I've been telling traders before, whenever we see a triangle, is a warning. All right, any chart pattern in the shape and form of a triangle is giving us a warning that anything is possible. Do not assume that there will be a continuation. Just think that anything is possible because it's a warning. All right, but when we are talking about the Elliott wave, okay, triangle, they are powerful, okay, chart pattern that allows Elliott wave traders to focus, okay, the financial market. The best place for the Elliott wave triangle is the fourth Elliott wave. We usually see triangles during the fourth Elliott wave because one of the characteristics of the fourth Elliott wave is that it's very often a shallow, okay, corrective wave. All right, and we are more likely to see, okay, the triangle. Also, when we are talking about the Elliott wave triangle, we are talking about the ABCDE a chart pattern. All right, and there is a price structure for those triangle because we have, okay, the price structure is okay. Down here you can see this is the A. I will be recording other videos about the triangle, okay, in the near future. So stay tuned. So keep posting comment and question in the comment section. I'm taking notes. And if I forget, like the gentleman did last time, remind me again. And I'll in due course, all right, I'm a busy person, but in due course, I will, okay, record those videos, all right. So here it is, A, B, C, D, E. Now, you may be wondering what's going on here. I will be coming to that very shortly, all right? But the structure, the internal waves of the ABCDE are free, 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 which means the A can be subdivided into free, the B also into free, the C also into free, all right, the D also into free manner wave, and they see also into free manner wave. So you will see them, okay, sometimes it's not very clear, sometimes it's very clear. Here it's a little bit clear here. If you cannot, like now I'm on a quarterly chart, it's for the first time I'm on a quarterly chart doing a wave analysis, all right, so you'll be surprised. So if you can't see it on one time frame, you need to drop to the lower time frame, the nearest lower time frame, all right. So for the quarterly chart, there's one that is clear here. See here, they move here. 1, 2, 3, all right? And sometimes it's not very clear or can be messy. So another thing I will mention to traders when it comes to the triangle, be very, very tolerant. Am I making myself? Am I speaking American accent? Now, what I meant is that, have I make myself clear, okay? If you are dealing with triangle, expect a messy chart. Don't be so rigid, all right, with the triangle. Though, now, some trader may say, George, that's not a theory. Yes, the theory is a theory. But when we come to the practical Elliott wave trading, we see things that can be a little bit challenging. Though we say A, B, C, D, E, sometimes the prime may be confined in a triangle, okay, going on and say A, B, C, D, E, F, G, and so on. It will just keep going up and down in a triangle for many, many times before it will finally pop up. So you may have a double triangle, which means A, B, C, D, E, X, A, B, C, D, E, X, A, B, C, D, E, X. All right. So remember the combination, the S. I explained it to you. What is the S? A trend that has failed. It's also a connector of two corrective waves. That's the X wave. All right. So sometimes you may have many triangles being connected together, but sometimes it's not very clear because all you see, my friend, is just a price confined in a triangle. So The best approach when one is dealing with the area wave triangle, do not take it as a size ABCDE exactly, and then you say definitely from here it will go up. If you look on my chart here, according to my wave count, feel free to disagree with my wave count, which is normal. You see 1, 2, 3, 4, 5. So here you will use a top-down trading method, okay, to trade it. But look, as the price start going up, it went up and hit the top of the channel of the triangle, pull back again, forming a double bottom chart pattern before going out of the channel. So if you start to being too straight with the ABCDE in your triangle, you may have trouble to deal with it. If you don't want to play it from the lower side of the triangle, all right, you can just wait, say, okay. Either you are trading it as a consolidation because it's a consolidation that is confined in a triangle, can be expanding triangle, can be contracting triangle, can be descending triangle, can be ascending triangle, all kind of triangle. You may see different shape of form of triangle. All right, all you need to do is just pay attention that it's a consolidation. Either you want to trade it as a consolidation, which means you want to sell at the top using a top-down trading method and buy at the low. Personally, if the price is going up, I will not play the sell at the top because I don't want to contra trade it. I'll prefer to play it at the low. Anytime I hit the lower part of the triangle, I'll use a top-down trading method, okay, for day trading and swing trading purposes. If you don't want to be a day trader, a swing trader within the triangle, you can just wait until it pop out. You see here, it pop out of the triangle and retest it here, and then you take position from here. At this point in time, where my cursor is, and place your stop loss below the low before this low here. That will be a reasonable strategy to be a conservative, patient, okay, trader that waits. Or if you have a deep pocket and you know exactly what you are doing, as you pull back, you see 1, 2, 3, 4, 5. But I can tell you, triangle can be sometimes very messy. There are times when you pop out. I will be talking about that in another video. You may pop out, even out of the triangle for a while before going back inside it. All right, so be very, very gentle. That's why I say if you are a conservative trader, you may wait until the dust has settled before you take a position. Or you may use, call option to buy and hold, all right, and wait. Hopefully your option will expire, okay, before, okay, the price start going up, okay. So for triangle, don't be too rigid, and also expect it to be sometimes quite messy. The next thing, talking about the power of the area wave triangle correction trading, that power is exposed usually when we see the triangle, the ABCDE triangle in the fourth area wave. It becomes so powerful. Look at this chart here. The financial instrument that I'm looking at, just looking at my preliminary wave count, don't be too strict with me here, all right? Because I just draw it too. So if I call this first wave, second wave, third wave, and here we have, during the fourth area wave, we have a triangle. Now, it's so powerful when we see the triangle in the fourth area wave. What is indicating to us that there is a high chance that the fifth area wave will be extended. Let me drink my tea. Allow me to say this again. When we see the triangle in the fourth area wave, it's indicating to us there is a high chance that the fifth wave will be extended. And this is what has happened here. You can see that after the triangle in the fourth area wave, we see the fifth wave that has been extended. It's the first wave or the first minor wave or the fifth wave, second minor wave or the fifth wave, also a triangle, the third minor wave or the fifth wave, and the fourth minor wave or the fifth wave, and the fifth minor wave or the fifth wave. Here, this is one example when what is said in a theory that when we see the fourth area wave as a triangle in the fourth area wave is a triangle, there's a high chance that the fifth wave will be extended. That was the case here. But always, as I said to you before, the area wave principle is a guide. Sometime, okay, you may see a triangle, all right, in the fourth area wave, but the fifth wave will not be extended. You can quote me on that, okay? You can quote me on that. Because sometimes traders think that it's exact science, all right? that definitely, because we see a triangle in the fourth Elliott wave, definitely the fifth wave will be extended. All right. One of the reasons why sometimes you may see a triangle in the fourth wave, but the fifth wave will not be extended, just because of the fundamentals. So you see a triangle, technically speaking, the fifth wave should be extended, but the company, the fundamentals are weak, it's not going anywhere, or market environment is becoming bearish. We are at the beginning of bearish season, it's not going to go anywhere, all right? That's one of the reasons, okay? Another reason may be the third Elliott wave, probably the third Elliott wave has been extended so much, stock went up too far, it's almost 7 times its book value, all right? Now, the reason why we usually see a triangle is because of a strong move. Strong move also can slow down the price. You remember what I said before? High volatility often is followed by low volatility. So, third Elliott wave being extended too much, and the market say, "Ooh, oh, that was good," when everybody rejoicing. And people still want to buy. That's why we will expect the fifth wave to be extended. But if the smart money that knows the book value, the smart money, they know the book value, they say, "Oh, we have already done 8 times the book value of this stock is truly overbought." Now, a stock is overbought, can continue to go up if it's creating more value, added more value, it's adding new value, right? Creating, becoming more innovative, gaining more market share. It may be overbought, but may continue to go up. That's why we have sometimes the fifth wave extension, and most importantly, the fifth wave extension of the fifth wave itself. When we see the fifth minor wave or the fifth wave also being extended, this is the story, the characteristic of bullish stocks. The fifth wave itself is extended, but again, the fifth minor wave or the fifth wave is also extended. All right. So it's a powerful corrective wave because it's indicating to us something that is likely to take place, that the fifth Elliott wave will be extended, but do not use it, okay, as a sign. For this stock, Walmart, that was the case. We see first wave, if you agree, second wave, very fast, third Elliott wave, consolidation, which is a triangle, ABCDE. As you can see, it was messy later on. That's what I'm talking about. Do not expect it to be clean cuts, ABCDE. And sometimes you may not even see the internal wave, even if you drop down to the first nearest lower time frame. All you need to concentrate on is to just draw the triangle and wait for it to pop out. Here again, you can see that as it pop out, it breaks the ball, it forms again a smaller triangle. If you look carefully in that smaller triangle here, all we have in that triangle, look, there was this move down. I'm going to put a bit of color into it so you start seeing it clearly now. Okay, that's the move up. Let's see whether we have, that's the second move up, that's the B. All right. And as the third move down, those waves can overlap each other, all right? They can overlap. They are messy, okay? They are not impulse waves, so they can overlap, okay? And now we have, okay, the D. And now we have, okay, the E. E for echo, all right? So we have A, B, C, D, E. It's a triangle. Now, as I told you before, what is it correcting? It's correcting this wave here. This is the first minor wave of the extended fifth wave. So our fifth wave is from here to here for Walmart. But then you see, now we are having a triangle in the second minor wave of the fifth wave. Remember what I said to you before, that whenever somebody say you never have that, it's because they are using the theory as a sign that we do not have a triangle in the second Elliott wave. You will never see that. Then I say, well, that's fine. Use it that way. I don't want to use it that way. Sometimes I see it. Though the theory doesn't say it, well, I see a triangle, I just acknowledge the triangle. And if it breaks above it and retests it, I want to be part of it. That's all. I'm not taking it as a sign. I'm relaxed. Okay? So you can see here, the stock, you see, it burst out. You see, it went up to this point. See the tail of this candle here? It's trying to retest the top of the triangle. I'm talking about the tail of this candle. So the market tried to pull it back to retest that triangle, and from there, boom, up. All right. Now we can go a little bit deeper, looking at the internal wave, or this third wave here should be subdivided into 5. So we can go, because I'm on a quarterly chart now. If I want to zoom into that price action to validate my wave count, to go a little bit deeper, like an exact science. Is everything aligned clearly, George? All right. I'm going to record another video very shortly after this one, and I want to show you one example when the area wave rules. We need to bend it a bit, and you will see why I get confused with that wave count, and we'll be talking about it in another tutorial. All right, okay. So then we have the third wave followed by the fourth wave, and now we have the fifth wave. Now in this session, look carefully here. That fifth wave is again choppy here. All right, in this zone, it looks to me we have again a triangle at the end of the fifth wave. So a fifth wave can also be in a triangle. That's what we call the ending a triangle. Go to www.24elliottwave.com, all right, and click on ending a diagonal. Ending diagonal. When we see that the fifth wave is also subdivided into 5 minor waves, and those 5 minor waves are free. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. But it those talking about the ending diagonal is different from the triangle that we call the ABCDE. The ending diagonal, which is also a narrow, all right, a narrow triangle looking up in an uptrend and looking down in a downtrend. The ending diagonal is an impulse wave. Is different from the ABCDE triangle that we often see in the fourth Elliott wave. So here it looks to me we have an ending diagonal. When we have the ending diagonal in the fifth Elliott wave, which is a kind of a triangle, though we call it diagonal, it's also giving us a loudest warning that expect a sharp move down. Look at the move down. Was it sharp enough for you? Pew, 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 pew. I think it's quite sharp, this one. Look at this one. The ending diagonal at the top, all right? But now we are expecting for this stock, Walmart stock, a flat correction. And analysts at Jefferies Security, as I was telling traders at 24 Stock Trader YouTube channel, I recommend to 24 Elliott Wave Trader to subscribe also at the 24 Stock Trader YouTube channel. I promise traders that that channel, the 24 Stock Trader channel, will be amazing. Though it's quite difficult to start a new channel on YouTube, you hardly get any view. You only have few people watching your video, and it's quite frustrating. You don't see anything like 24 Elliott Wave. But I recommend to traders to join us at 24 Stock Trader YouTube channel, and I have a plan for that channel, and it will be amazing if you trade stock. All right. So one more time. You see here, it dropped down very fast. So the ending diagonal is a kind of a triangle, but it's nothing to do with the ABCDE channel. But the price structure looks similar. It's also free, but that free, the way we have it, is not a corrective way because it's not correcting anything. So you can see here that a triangle at the end of the fifth wave, so the fifth minor wave of the fifth wave is a diagonal, ending diagonal. It's not correcting anything. That's why we don't want to call it triangle. But a normal triangle, ABCDE, should be correcting something because it is a corrective wave. So whenever you see a triangle somewhere and it's not correcting anything, there's a high chance that it's an ending diagonal, and that ending diagonal you are likely to see it more in the fifth Elliott wave. All right, but the power of the Elliott wave triangle correction trading is in the fourth Elliott wave when we have a triangle ABCDE. You want to check the funnel. The best approach, practically, talking about practical Elliott wave trading, not only technically trading it, all right? You now say, all right, according to the Elliott wave, what this man George was saying on YouTube, all right, I hope he knows what he's talking about, all right, is to go to Google Finance, all right, check the financial, all right, check the especially if you want to buy and hold or use a call option, check the financial. All right? You challenge yourself and go to finance, go to Google Finance. You'll be amazed how good you are as a fundamental trader. You think that you're a technical trader. Challenge yourself and check the financial. Perform Google Asset test. Read economy news. Click on related company. See the competition, what's going on in that sector, and make an intelligent decision. And then you say, okay, where is the market now? Because we must adhere to the trading triangle. So we are trading first the market, the S&P 500. So we may see like this at this point in time. If the market itself is bearish, you will concentrate on bullish watch list. You will ignore this. You will leave this one aside. Say, well, it looks bullish, but I don't want to trade it now. This is about market timing. Market environment is still looking good now. S&P 500 confined in a triangle. I prefer it to break above that triangle retest before I may make my decision. So those are the things you have to do practically to make your Elliott wave analysis work harder for you. But it needs your own contribution, your participation, combine the technical analysis, the Elliott wave analysis with the fundamental analysis. All right. So I don't know whether I've covered everything I need to say, but we will be recording more videos about the power of Elliott wave triangle correction trading. It is a corrective wave. That's the first thing you should know. All right. We may have multiple triangles sometime. So when you have multiple triangles, we have a complex correction. So you have ABCDE X and another triangle ABCDE. So here you can see that the wave counts of a higher degree is this one, higher degree. Okay, see, first wave, second wave, third wave, fourth wave, and a fifth wave. Now, a wave count of a lower degree is this one, 1, 2, 3, 4, 5. There is a bigger cycle that is developing, and this is a minor cycle. You see this move here, all the way up here, and this move down. It's a minor cycle of the bigger cycle. But when we are looking at the bigger cycle, all right, it's from here to this point here. This is the end of the trending phase. We are now expecting a correction in the shape of a flat correction, 1, 2, 3, bringing the price to this zone. According to Jeff Ferry Security, they set a price target for Walmart at $86. There is a war between Walmart and Amazon right now. They are both slashing their price, and Walmart is trying to gain more market share online because right now they are more about high street shop, and they want to have more power online like Amazon. So there is I recorded a video today which I posted to for stock trader. A channel, and the title of that video is Stock Trader Compared to Stocks War Between Walmart and Amazon. All right, so check it out. So this is one thing you need to understand. So we can have multiple a triangle. And you can see here there was a triangle, and then we have this move up, which is the first minor way of the fifth wave, and then here. But at the time when you were here, you'll be thinking that this is a complex fourth wave, yes or no? So you were here, suppose you were here, you say first wave, second wave, third wave, now you say fourth wave. So you bought it somewhere here, it pop up. Now you have another triangle. So when you were here, repeat, that's why we are saying wave count, one step at a time. When you were here, you'll be thinking that, okay, all right, first wave, second wave, third wave, and now the fourth wave is a complex. Fourth wave, you'll be saying we have a triangle, George, X, and another triangle. So you say this is a triangle, double ABCDE. But now, as the price progresses, we realize that no, our fourth Elliott wave in fact has stopped here, and this is the first minor wave of the fifth wave, and this is the second minor wave of the fifth wave, which is a triangle, followed by the third minor wave of the fifth wave, and the fifth minor wave of the fifth wave, which is in fact a kind of ending diagonal, a type of a triangle, but which is not a corrective triangle. Therefore, we call it ending a diagonal pointing up and alerting us that there's a high chance that the price will drop down very fast. We will expect a volatility to increase. All right. Normally the volatility is low during a corrective wave, and the volatility is high in an impulse wave. But when we have the volatility very low in an impulse wave like the fifth wave, we will expect the correction to be the opposite. So when an impulse is low volatility, we are likely to see a correction that is very, very fast. I will be talking about it. There's a gentleman also asking me to record a video about the sharp correction. So remember just now that when the impulse wave, the volatility is quite low during the impulse wave, the correction is likely to be volatile. That's why one of the reasons why we have the triangles in the fourth Elliott wave is because the volatility is quite high during the third Elliott wave, and now the volatility is low during the fourth wave, and we tend to have more triangles during the fourth Elliott wave. So the best place to see the triangle is the fourth Elliott wave. All right. So if, for instance, you see the fourth Elliott wave somewhere else, always put a question mark on it. So here, as we were here, you'll be thinking of a double triangle, a double ABCDE. It's now that it becomes clear to us that in fact it's the second minor wave of the fifth wave. The triangle, we have different type of triangle, the ascending triangle, the descending triangle, the contracting triangle, and so on. But don't get too confused with those triangles. What you can do is to go online, check a chart pattern, triangle chart pattern. There are a lot of articles that will show you all type of triangle that we can use. Check investopedia.com, check the triangles, chart pattern. So go to investopedia.com and then search for a triangle, pattern, triangle chart pattern. And they will see article, they will show you all type of triangle. But remember that we are Elliott wave traders and we want to know where the triangle is formed. But by reading those articles, it will also help you to understand, the triangle, all right? Have I missed anything? All right, let me know in the comment section. Do you want to add something? Add it in the comment section. Do you have any question, all right, suggestion? Put in the comment section, and of course, I will be recording another video, to answer your specific question. This is the end of this tutorial. We are the TSTW24 traders talking about the power of Elliott wave triangle correction trading. Happy trading to you all, and speak to you soon. If you like this video, yes, give us the thumbs up. If you dislike it, I want to know, please give us the thumbs down. So next time, I will do my best to improve my recording. Speak to you soon.